Welcome back to my video. Today we will talk about liquidity pool. Liquidity pool in essence is when the money in the market is to be grabbed. So most times you ask yourself, or if you want to enter the market, you should ask yourself, where are the money in the market? Because that is the question the market makers ask themselves. The market manipulators, the big boys, they ask themselves, where are the money sitting in this particular market? Because they need the money, so as you also need the money. You understand? And little money is what they use to grow their own fund. So as you can see, all these zones here, in a higher time frame, all these zones here, you understand? So most times you waited for a trade to get to a particular zone. As market is emotion and everything in it. So when you get to that zone, it will begin to reject, showing you what kind of rejection. But basically, your emotion does not take you, and you think the market has rejected fully, it will take you out. Because when you pull that sell or buy order, you will eventually want to pull your stop loss very tight, or possibly above their previous high that you put in your buy or sell order, and they will just take you out and continue where they are going. And actually, that movement is where you predicted that the market will go. You don't predict the market, you analyze the market. You initially don't predict the market. So let's use this as an example now. You see this movement. It came down here, it rejected, it went up, it now breaks the structure, which is it breaks the zone, breaks the support zone and makes it a resistance. You understand? And makes it a resistance. So as this is a higher time frame, this is 4 hours. Maybe you're a scalper or intraday. You will be thinking that this particular side, this particular engulfer, this particular engulfer, it closes engulfer, full bearish engulfer, it closes another bearish candle. At least this is a clear confirmation. You understand? But because you're a scalper or intraday, if you put your stop loss here, you will paraventure, your stop loss will be big. Depending on your target, your stop loss will be big. And if you check in a lower time frame, let me highlight this. I think I'll do that with another color. Let's use this color. This is it. It's gonna be a very big move if I happen. Okay. Alright. Hope you are watching me. It's gonna be a very big move, as I said earlier. Okay, here it is. Do you see that? Did you see that? This is the candle, the two candle that you're obviously watching at 4 hours time frame. This is the two candles. You see that? So most times as a scalper or as a intraday, let your emotion not push you into into entering a market without seeing the market liquidating that particular area that people are waiting to sell. You understand? People are waiting to sell. Likewise, gold. In gold cannot move without a liquidation. It must liquidate some certain people so that it will get a momentum to fly. You understand? Get a momentum to fly. So for you to beat liquidity, you need to put your stop loss in a very valuable. After your analysis, you put your stop loss in a very valuable. Regardless the money though, because if you're a scalper also, you wait for it to liquidate all those areas. As you can see, instead of you rejecting at this zone, it have to pull up the zone. You understand? If you go to lower time frame, you will see this market has break this thing. I think you have something like that. Yeah, you will say if you go to a lower time frame, you say this market has break this structure. It's retesting. Who told you it's retesting? Because all the movement is going on in the higher time frame. And when you understand what is going on in the higher time frame, that is when you will scalp the lower time frame safely, make your profit with ease, with less emotion. Understand? But if you don't focus on the higher time frame and you continue monitoring the lower time frame, it will be taking you out every moment that you enter the market. To be taking you out. Somebody will say, this thing has broken and it has been tested, and you're waiting for buy. Waiting for buy. Waiting for buy. So why are you waiting for buy when in a higher time frame you've not seen any confirmation? Like we can see, as you can see here, apart from this 200 moving average, which is the black one, we're talking about it also has a strong bearish engulfer. It also closed with doji. You know, doji is a continuous candle. Close with doji. We don't know what this particular candle is going to close in, but believe me, it will also close in a bearish candle because of the momentum. Do you understand? The bearish candle. Do you get that? So if you see this kind of momentum, this kind of movement, and you go to lower time frame like 15 minutes, 4 hours, 15 minutes, you understand? Let's highlight the higher time frame. I'm breaking all my entry down to it for you guys. I know this kind of video, or probably this kind of lesson, you pay a huge amount to do that, but the spirit just led me that teach people. You don't need to keep the knowledge. The money in the market is not yours only, so people need to make money also. You see, I highlighted this. Okay, I highlighted this. Possibly when it shows you a bearish engulfer, this higher time frame 4 hours is a very strong bearish engulfer. Okay, so even 1 hour time frame also, as you can see, this is a hammer. This one is a hammer. It's not a doji, it's a hammer, because you see the wick is not equal. It's not a doji. This one also bearish candle after the hammer. What does it tell you? It tells you that the market has rejected. Had it been this is a doji and it comes with bullish candle, what you need to do is for you to wait for it to give you something structured. You understand? Something structured, especially in a lower time frame like 15 minutes. Let's use 15 minutes as an example. I think this color would be something. Let me change the color of this so that we will have. Okay, I think this will be okay. Let's go to 15 minutes. This is 15 minutes. I think it's okay. So that two candles you see now, remember I told you, and this is my entry I'm showing you now, the main strategy I'm talking about. But we still have a long way, because if you don't know what the market is doing, where the market is going, not where market wants to go or where it will go, it's where it is going. Do you understand me? How to analyze the market fully. You will not be able to trade a successful market, or probably a successful pay with any strategy, whether indicator or whatever. You must also know the movement of the market, all the key things you need to know so that your strategy will be effective. So as I'm talking about now, that two candle we talked about hammer, we talked about bearish candle. In a higher time frame, we have, in a 4 hours time frame, we have bearish engulfer. We have what is it called, doji candle, also bearish doji candle. So now, if as you can see this, you zoom it, you also have bearish engulfer, you also have bearish candle, you have bearish candle, you have doji, you have imba, you have also bearish candles, some bearish candle, and so many others. So now, this market, this is the previous low. This one now, let me zoom it. This one is the previous low. This is the high. This is the previous low. It makes a high. Forgetting the zone, so I'm talking about liquidity here. Forgetting the zones, you are inside the zone already, and it has already broken the zone, but we are still in a bearish market. The zone is a confusing factor that they want to enter. Many people will enter here. You see this one, you see many people will enter here, they put their stop loss here. You get me? Some will enter here, see, they will enter here, is already in the zone. They enter here, targeting their stop loss here. Oh my god, where's my listen? Targeting their stop loss here. And as you can see, it has taken all the stop loss before making its movement. So now, when you can't enter all these ones, why would you enter this place? Why would you enter all this place? Where is the structure? Where is it? There's no structure there. So it is here probably you need to enter. It has broken this low, create another high, come down, break the low. This is the previous low it create. After this high, it create this low. It went up, it comes down, it breaks the low. You can see this thing here. This one, you see it? You can just place it here and wait for it. When it breaks the low now, it went back and retested the low. Retested it. You get me? Retested it. If you I don't want to go that angle today. I don't want to go that angle. So but I can teach you this is another block. I want to use another color. I think this will be fine. It's gonna be two now. Wait. I think that will be okay. This is another block. This bullish candle before this bearish candle in a bullish movement is another block. You get me? This is another block. This is another block. Okay. This is a fair value gap. Fair value gap. F's. Yeah, put this here. Okay. It's not coming out. I'll put it inside this thing. So fair value gap FVG. There's it. Where is it? Okay. I don't even know which color to use now. Not the colors, I think is occupied. Okay. Ogali. Okay. This is a fair value gap. Connecting this week and this week. You get it? This is a fair value gap. If you put your sell stop there, your sell limit there, it will trigger and you'll be in safer side. If you understand fair value gap, this is a fair value gap connecting these 2 weeks. This gap in between these 2 weeks, this candle and this candle. Let me zoom it. I think it's already zoomed finished. My laptop is okay. So this bearish candle and this basic candle after the bullish candle, which is the other block, in between it touching the 2 week, is a fair value gap. Do your back testing, study very well, you understand what I'm saying. You understand? So when you put that, you break the structure. This is the structure we're talking about, the lower structure. You break the lower structure here, you pull back exactly to that lower structure that you broken, then it's supposed to be your entry. You enter there, put your stop loss above this one, instant, put your stop loss, then targeted the low. You targeted the low. This is what I'm talking about. Can even put sell limit. Sell limit there when it's pulling back. Then put your take profit to the next structure, because this market will get to the next structure, whether you believe it or not, to get in next structure. As you can see, it retest, break down, it pull back again, it retest again, break down, because it's going to impulse, correction, impulse, correction, impulse. You understand? And it will still correct here, still be moving until it gets to a particular zone, pending we're not in control of the market. You understand? So this should be your entry, this should be your take profit, or the other zone. I don't know, let's see if we can see, because I told you guys, if I'm to come in here, I should get off here. I'm not greedy. I'll be satisfied with whatever the market gives me. You understand? If you to enter here, you see the reward ratio, you see where you are getting off. This is where you're getting off. Let's come again, where is it, yeah, this is where we say we'll enter, and this is where our TP is supposed to be. You're not gonna put it at the middle, you're not gonna put it at the end. Don't be greedy, guys. You put it before the zone, so that whatever happens, even the week will trigger it. You understand? The week will trigger it, and you are out of the market. If the market reacts there going back, you're already out. If it continues going down, it doesn't concern you. You understand? Except it shows you another thing or another entry. You get it? So this is the liquidity I'm talking about. You save here for all the structure. Like here, people can say, I enter here, I will enter here. You don't do that. All these places in a lower time frame hasn't shown you any structure. This is the movement that shows you the structure. You get it? So I don't want this video to be long, so that you guys can watch it and ask questions when the class comes up. So I think I will end it here, and more question entertained, then we'll answer it and try and figure out what next to do. This is liquidity pool that I want to analyze it. I want to break down for you guys here, so that you will be picking up some factors in trading and making your trading journey very easy, not stressful as we that went in a hard way. So guys, see you in the next video. Bye for now.